There's one mistake that's costing you funded accounts, and I guarantee you're making it right now. And the thing is, this mistake once cost me over $100,000 in funded accounts in one day. But the moment I fixed it, my win rate went from a 40% win rate to an 87% win rate. And within a year after that, I was able to build a $1 million funded portfolio. Now, this mistake is not your strategy. It's not your risk management. It's actually simpler than that. And in this video, I'm going to be showing you exactly what that mistake is on the charts and how you can fix it starting today. Without further ado, let's jump into it. Now, the mistake is you're entering trades before you get full confirmation, right? You'll see a full setup forming, you get excited, and then you enter early. You tell yourself that it looks good enough, even though you know it's missing something, but good enough is not A+, and that is exactly why you keep getting stopped out. Now, why does this happen? Well, the main reason is going to be impatience, right? You don't want to miss the trade, or you have FOMO, and you're thinking to yourself, what if it runs without you? When in reality, if a trade runs without you, it's not your trade to take in the first place. And the other reason is most likely going to be boredom, right? You've been waiting for hours on the charts, you've been sitting there, no setups formed, and you want action, you want to feel the dopamine of being in a position, and it ends up costing you, You enter with 2 or 3 confidences instead of waiting for all of them. It's missing a few and you still enter. Price hasn't actually fully confirmed your setup and you end up getting stopped out, right? And then you watch the setup actually form properly a couple of candle closures later, and you get super upset. It goes exactly where you thought, and yeah, it just ends up not going well. Now, I know that you're doing this because I've done the exact same thing for months, right? It's the most common mistake I see in students before they join TRLS. It's why I blew 2 50K accounts walking home from work back before I was a profitable trader. Yeah, I really did that. 2 50K funded accounts back when I was trading CFDs, so nearly $1,000 worth of funded accounts gone in a 15-minute walk from home because I was impatient, and then that impatience led to a FOMO entry, which then led to revenge trading, and the snowball starts from there. Now, the first example of an impatient entry is right here on the charts. Now, a lot of my students would have taken this if I hadn't gone ahead and taught them the right confluences. So if you're not my student, maybe you took this and maybe you got stopped out. But as you can see right here, we have a clear rejection off the bottom of the range right here, and every time in the past we've seen a continuation up. So for me, this would be a good trade to look at a reversal coming into the bottom of this range and bouncing up on gold. The one thing that actually didn't end up forming though, as you can see right here, is when we get a bullish candle closure off the bottom of the range, I teach all my students to wait for liquidity. Now, if we look at the confluences that are present and what most traders would have taken this off of, you have a sweep of a low down here, you have essentially a bullish market structure being formed, right? You're starting to make higher highs and higher lows right here. And you also have a price action mirror to the left, right? We see every time we close above this range and bounce off of it, we have a strong push to the upside. So those are the 3 confluences I would be looking at, as well as that bullish candle closure. But like I said, what confluence are we missing? We're missing the liquidity, and this is where most traders would enter regardless because they know it's going to be bullish. They've seen a candle closure, breaking market structure, and now it surely should fill the range. But as you can see, this candle here didn't actually grab a bottom wick. It didn't grab liquidity on the most recent candle. And what ends up happening is maybe your stops are below these lows, you end up going ahead and getting stopped out. Now, in this case, you actually got lucky because even if you did get stopped out, price ended up going in the wrong way anyway. But what actually happens a lot of the time, if we look at entry type number 2, is a lot of traders will jump into a position essentially anticipating a push in a certain direction. And then what's going to happen is they get stopped out and price moves in their direction afterwards, which is what leads to mega FOMO, revenge trading, and exactly what we want to avoid, right? If you look right here, you have the same position forming on the lower time frames, right? We have a tap into a strong level right here. You have a rejection followed by a relatively strong closure. Again, this would potentially be a position if this candle would have closed bullish. Now, a lot of people would have seen this immediate rejection, or maybe they would even be in a trade from earlier on here. And essentially what they would have been understanding is, okay, we kind of tapped into the range, we grabbed some liquidity, and now, again, we have a range fill right here. Maybe I can put my stops below here. And then what happens is they end up getting stopped out, and then price runs in their direction towards their TP anyway. Now, why was that? Because you had the bullish market structure shift. You had the tap and the rejection off the level. You also had a previous price action mirror to the left here. But as you can see, First of all, we've swept some liquidity, but we haven't actually swept any previous lows as well. Now, what ends up happening is you end up coming in, sweeping these lows down here, and essentially you break these previous lows as well here, grabbing more liquidity, and then you get the bullish close, which inevitably leads to the push up. And if we look to the left as well, what do we reject off of? We reject off of another strong support level. So as you can see, just by missing that one confluence of liquidity, what ends up happening is, yes, it makes the initial rejection, it comes down for the more liquidity, and then continues up. And the reality is, if this setup was real and you were going to get super excited to take this trade, it wouldn't actually bother you to wait for another liquidity grab, right? If it was going to run up and fill the range without you, the setup wasn't yours in the first place, so you should be waiting anyway. Now, it's not always liquidity. Maybe people don't wait for the right market structure shift, or essentially they're just taking entries that they think are good enough. For example, if we see right here, another entry that I would be looking at taking, right? We have a bullish market here. We have a strong push up that should lead to another higher high and a continuation upwards. And if we reverse back a little bit, when we were in this position right here, you essentially have what I would call right now a higher high followed by a higher low being formed, and we'd be looking for buyers to take the market up. But what most people forget to do is you have all of these confluences again. You have bullish market structure. You actually have liquidity in this case being grabbed below the level, actually swept this previous no wick candle as well, which is another confluence for me. But they forget to check the higher time frames. And if you take a look at the higher time frames, what you're going to quickly see is when you go to the 2 hour and then the 4 hour, you start to see that you're actually extremely bearish on the higher, but also the lower time frames. We're making bearish market structure on the lower time frames, as well as making a very, very strong push down on that 2 hour candle. So inevitably, by not checking those lower time frame and higher time frame candle closures, i.e. the multi-time frame analysis that I've taught you in the past, traders end up failing. Now, this is not about the type of confluence that I'm teaching you. It's about understanding that all of the confluences for your setups need to be present before you end up taking a trade. Now that I've shown you examples of bad setups or setups that people have taken too early, or they've been overconfident, or they've actually just FOMO'd in way too early without extra confluences, let me show you an example of the correct entry. And if you're doing it right, this is what a trade looks like. Now you can see right here, we have a strong push into the bottom of the level. I'm going to use the same setup throughout all of these to show you that the exact same setup works, but it's just all about the confluences. Now you can see right here, what ends up happening is we have a strong push down into the bottom of the range, followed by a bullish close, no liquidity being grabbed. And what ends up happening is the trade plays out. And yeah, good. But like I said, first of all, this closure wasn't strong enough for me. Second of all, no liquidity has been grabbed. There's no major sweeps or major wicks downwards. So even though this one played out, I didn't take this position, but I did in fact take the next setup, which formed, as you can see, 1, 2, 3, 4, 5 candles later. So that's going to be like 4 hours after this trade formed right here. But I waited, I stayed patient, and what ended up happening was actually we took a trade after the exact same trade. It came and retested the level. This time we swept these lows right here and actually ended up closing strong bullish here with a strong bottom wick. I took the buys on the flip of the next candle, and instead of it actually only running to here, it ended up running all the way. So you can see here, by waiting for the better setup, not only can you see that, yeah, we missed the first setup, but there's always going to be another setup. But secondly, you can also see that a lot of times what will happen is if you see a B setup and you don't take it, and then you end up waiting for an A plus setup and you take it, it's going to end up in a better trade. Obviously, that's a higher risk to reward trade, and it ran further. So you're going to make more profit anyway than if you would have FOMO'd in. Even best case scenario, the FOMO trade does somehow play out, you're still going to make more money just by taking the A plus trades, right? But let's get into why you can't get payouts and what actually the psychology behind you taking this trade actually is. Now, if we look at the journey of a patient trader, what you're going to see is the patient trader sits there and does the right things every single day. So he comes to the charts on time, top-down analysis, looking at all time frames, sees a setup forming like I just shown you, checks that all of the entry criteria are formed, and maybe a trade forms early on like the one I just showed you right here. But there was 1 or 2 confluences missing, so he doesn't take the trade, avoids either a major loss or just feels good and being essentially boosted in confidence because they stayed disciplined or they were right. Either way, if you were right and you avoided a loss, you get a confidence boost. And even if you were right or if you were wrong and it moved in your direction, you get the confidence boost because you know deep down within your heart you're doing the right thing. A couple of hours later, an A+ setup forms, and then you take the trade and he's happy with the outcome regardless, win or loss, because he knows he's essentially using a system day in, day out, that's going to make him profitable and make him money over time. Now, the impatient trader, which is you right now, turns up to the charts. Maybe you're just a little bit late. You turn up before market open. You rush your analysis. You see a setup forming. Maybe you actually do stay disciplined, but you end up getting mad because you missed the move and you don't have a proper framework behind your discipline and your psychology. And then whether it's straight afterwards or hours later, you get impatient, you've been on the charts for hours and nothing's happened. You see a trade and it's maybe got one or two confluences. It's good enough, you enter the trade, and then you get absolutely cooked. And this is realistically the reason why you can't get the payouts. You get caught in the FOMO trap. Now, you see price moving, and inside your head, what you're thinking is, oh, the setup's nearly formed, but volume's high and it's actually ripping right now. And one of two things is going to happen. It either rips past your entry or the candle's closing and the volume's too high. So you get scared that you're going to miss the move and you jump in. Now, you tell yourself it's good enough and the setup's going to form after you jump in, so it's fine. But this is just cope, right? You say, oh, I'll jump in now. It's definitely still going to close above and then fill the range. But it's just cope, 100% cope. And then obviously, either way we go down here, from a PA and a trading standpoint, from a technical standpoint, you had a bad entry, the entry didn't form properly, and what ends up happening is price reverses, your stops are either hit or you get a bad win. So both of these are actually bad. Even if you win the trade, it's a bad win, which is reinforcing bad decisions, right? Because you've essentially been rewarded by taking a bad decision, which down the line is going to be way more harmful than just actually taking a loss and hitting stops, right? So either way, both of these are really bad. But actually, if you win a FOMO trade, it's even worse than actually losing one. And then from a psychological standpoint, you have a subconscious fear, right? Your setup's not correct when you're in the trade, but you FOMO'd in. Deep down, you know the setup's not correct. So that means you start to trade emotionally. Your decision-making becomes emotional. You start to manage the trade poorly, which leads to blown accounts, doubling down, stops being hit. Or you close early and then it runs in your direction and then you get FOMO, etc., right? You know exactly what this ends up happening. Now, otherwise, your confidence is hit as well. You have a frustration by breaking your plan and losing, and that leads to overtrading or revenge trading. And obviously, neither of these four things, so these are the only outcomes, by the way, of actually catching a FOMO trade. All four outcomes, no matter what, even if you win the trade, are bad and negative outcomes for the longevity of your trading. So that alone should be enough for you to say, all right, I want to stop doing this. Now, what is the root cause of this though? All of them come down to one thing, and it's just impatience, right? You want to make money and you don't have a lack of strategy or a lack of knowledge. It's just impatience. You want to make money and you want to do it quickly, but you don't know the correct way to do it. So how do we actually fix this? Well, what I've done for you guys to actually fix this problem once and for all is I've created the TRLS entry matrix. Now, the TRLS entry matrix is essentially a one-stop shop of actually what should be running through your head every time you take a position. Now, essentially, we're just going to follow through. I want you to write this down and you can make a process, take a screenshot or whatever, because this is going to actually stop you from making bad decisions and taking bad trades, right? So obviously the first step is we're going to do, as every trader does, perform your market analysis. So figure out what your confluences are, figure out your analysis for the day, your bias, etc., and then wait, obviously, right? So we come down here next. Is there a trade forming? No. Obviously, that leads to no trade, and you wait again, right? Over and over and over. And is there a trade forming? Oh, yeah, there is one forming. Great. Next decision. Does the trade follow market structure? No. Okay, back up to no trade, right? Very simple. And if it does follow market structure, yes, has the entry criteria and setup formed correctly. So if you're trading TRLS, that's going to be stuff like closures above the range, all time frames in alignment, liquidity being grabbed, all of these sort of things. Is there a legitimate breakout? Has the candle made a bottom wick? All of these sort of things. If no, then you know what's going to happen. Back to no trade, back to waiting, right? But if it does actually form correctly and we get to yes, well, what ends up happening is, are all the confluences present? We need to figure this out. And I've zoomed in a little bit here and actually detailed the confluences that I look for, right? Is there market structure in the right direction? Yes, good. PA mirrors, is there a price action mirror? By the way, guys, I have videos on all of these confluences right here on my channel, so make sure you go and check them out. Is there multi-time frame alignment, and is there DLV? Well, if there's all of these present, then can you take a trade? Yes. If there's not, obviously we go back to waiting, right? But if there's all confluences present, then you need to calculate your risk, figure out where the valid stop loss and TP is, and then you take the trade, right? And that alone is going to stop you from actually going ahead and taking poor positions, right? Now, this is something that I've taught to all of my students, and it's something that's resulted in them actually ending up and changing their trading, right? For example, let me talk to you about my student Isaac. Now, Isaac was someone who came to me and he knew exactly how to trade. All I had to do to him was give him this TRLS entry matrix, talk to him about his psychology, about patience, about waiting for setups, and actually give him a detailed plan of what he needs to look for in terms of entries. And he went from failing literally 50 plus funded accounts to the very next funded account in 2 days' time that he tried to trade, he'd passed. And then within the week, he was 150K funded, which is just insane to think of. And as well as that, from my own standpoint, right, before I fixed this, I had a 40 to 50% win rate. I was failing to be profitable. I was just losing all over in general, failing prop firms. Like I told you earlier, there was a day where I lost 2 50K funded accounts on a 15-minute walk from home from work. And after implementing this and actually fixing my patience, my psychology, but also my trade entry process, I went up to an 87% win rate, to the point now where I've now had over $100,000 in payouts in the last 12 months. I've currently sat at $1 million in funding, and my trading has changed forever, and it will never go back to a point where I need to worry about FOMO or money or anything like that, right? The very simple maths behind it is most traders are failing funded accounts, not because they don't know how to trade, but because they are being impatient and they're taking entries when they know they shouldn't. And a lot of times traders will even risk down on a trade and say, oh, this is a bit of a lower risk setup, let me just risk a little bit less. That just shows me you want to get in the trade. Why would you ever be taking a trade that you know is lower probability, or you deep down know inside you that all your confluences are not present? That makes absolutely no sense. When I take a trade, I'm taking a trade with full risk every single time because I know the trades are full confluences, A+ setups, and I don't need to worry about anything in the back of my mind, any confluences that are missing or anything like that. And if you are taking those small losses and risking lower, taking B, C setups or whatever it may be, this is just death by 1,000 cuts, and it's not going to get you funded. It's actually going to end up in your psychology going down the drain, revenge trading and blown funded accounts, right? I can tell you to wait for 4 confluences all day long, but here's the reality. In the moment when you get to the trade, in the heat of battle, you're going to forget exactly what you need to look for. Is that confluence 4? Is it close enough? Is this an A+ setup? That is exactly where most traders fail. They do not have a framework, a complete ironclad system to know when to take a trade and when not to. Now, this is what I do inside the TRLS inner circle. Whilst you learn and whilst we develop a framework for you, you send me your trades before you take them. I let you know whether it's a good trade or not, and then we review all of your trades going backwards of the last month every time we jump in a call. And that gives you the ability to see what I see, to take the trades that I take, and to actually learn to develop the discipline exactly like I have that got me to the position where I am now. This is why 80% of my students pass a funded account within the first month of joining, and 60% of those end up getting a payout within the month after that. I know those results sound crazy, but that is just how good the TRLS system truly is. In fact, it's so good that I'll put money on the line that you will get funded and you will get a payout within 90 days of joining the program. So if you are tired of getting stopped out and the trade then ends up running in your favor, you're tired of blowing funded accounts and just running around in circles with your trading, the link is in the description to join the TRLS inner circle. Now, I work with only 5 students at a time, and once the spots are gone, they are completely gone. But more of that later on. Back to the video. Now that I've taught you the TRLS entry matrix, what is your action plan? Well, your action plan is very, very simple. What I want you to do first, step number 1, is we're going to go back and review your last month worth of trades. So review your journal. If you're not journaling, then I don't know what you're doing, but if you're not, then I guess you're gonna have to journal for the next month and actually forward test this. For every losing trade, I want you to ask yourself, did I wait for the right confirmation or not? And I bet you that 70% of your losses came because you either took an early trade or you took a trade without confluences. And that's not really a strategy problem at all. That's actually a patience problem, right? So after that, what I want you to do is define your confluences. Now, I've taught you mine already, but I want you to actually write down exactly what your confluences are that you need to see before you enter a trade. Be specific, not vague. Price looks good or market structure is good is not a confluence. So we're going to need to see stuff like breaking specific levels or liquidity sweeps or break of Asia low or whatever it may be, right? Number 3 is I want you to use a physical checklist. It's not enough to have this on your notes app or something like that. I want you to have a written down checklist. I used to have one stuck on my wall behind my camera, behind the desk up there. And essentially that allowed me to take away the personal responsibility, and essentially I would check it every time. It is like having a mentor by your side. You are telling yourself exactly what to do before you get in a trade. Now, after that, what I actually want you to try and do from this point onwards is I want you to set alerts on your trading. Now, this may seem a bit left field, but it's actually going to stop you from sitting on the charts for hours and hours and hours waiting for positions. Set alerts for level breaks or whatever it is, maybe a key area that you need to be tapped, and essentially only come back to the charts when you actually go ahead and see that being tapped. Now, number 5 is I want you to actually track your missed trades. Now, a lot of people don't do this. They only track the trades they take. But when you skip a trade because the confluences didn't show, or maybe you skip a trade because, yeah, it wasn't a perfect A+ setup, journal it. This is almost like reverse journaling, okay? Journal it and you will see how many losses you avoided. So instead of actually tracking your wins, you're actually going to see how many losses you avoided. And the next time you come to the charts and you see an A+ or a B setup that essentially is nearly an A+ setup, but not right, your brain will remind you, oh, I shouldn't be taking this because in the past, this many trades like this have lost, right? And step number 6 is the 30-day challenge, right? I want you for the next 30 days to follow your rules that you've written down to the T, right? I want you to follow your confluences. I want you to take A+ trades only and track your win rate. I guarantee it's going to go up, and I guarantee the profit you make and the funded accounts that you pass is going to be exponentially higher than what you're doing right now. But here's the bottom line. You are one mistake away from profitability, and that mistake is entering trades too early. Now, wait for all 4 confluences every single time without exceptions, and you're going to see such a massive change in your trading. Now, those extra 30 to 90 seconds that you wait between taking a trade, deciding not to take it, or maybe just waiting for more confluences to align are going to save you so much money, and they are actually the difference between blowing accounts and building a career in trading. Now, if you want help learning to identify when all 4 confluences are present, if you want someone to check your trades before and after you take them until you're able to do it yourself, the link to the TRLS Inner Circle is in the description. I work with every student individually. We fix this mistake together and you start passing challenges. So much so that I will guarantee you're going to pass a funded challenge within the first 90 days of joining the program. Now, whether you join or not, implement what you learned here today, review your trading, and I guarantee most of the losses that you've been taking were due to early entries. And if you can fix that, you're on your way to becoming a step closer to profitability. Now, before you drop off the video, I want you to comment down below how many of your trades that you lost within the last 30 days were from entering early. Go and review your setups and review your journal and comment down below, but be honest, because I promise you, being honest about this is the first step that's actually going to go ahead and help you. Now, I post videos like this every single week, in fact, multiple times a week. So if you do want to become profitable, click that subscribe button, drop a like on the video, and I'll see you in the next one.